Investors buying yen on worries once again about Europe and selling the Aussie dollar as Chinese company earnings trailed estimates, igniting again some concern of slower growth in Australia's biggest trading partner. For more on the currency trade, let's bring in Douglas Borthwick. He's managing director and head of foreign exchange trading at Faros Trading. Good to have you back with us. Good afternoon.
Thank you.
Talk to me about the currency trade right now. What do you think is kind of the most interesting story we're seeing, Doug?
A lot of people are looking at the disconnect between the Australian dollar, stock market, Australian dollar, the euro, what exactly is happening. And what's happening is in October, November of last year, you saw a lot of reserve managers get out of the euro a little bit, pair their reserves there and put it into the Australian dollar sort of as a safety bet. And since then, we've seen some unwinding, and that's what you're seeing today. You're seeing a lot of buying of euro, selling of the Aussie as they sort of move the reserves back into the euro area because they feel a lot safer about the euro area today.
So not China-related necessarily, in your view?
Well, China seems to be the news fitting the move, but the Czech National Bank came out today and said in 2011 they decided to move some reserves out of the euro and into the Aussie dollar themselves.
Kind of an expected trade, considering things have seems to have quieted down a little bit.
Things have quieted down a lot. When you look at the basis swap, when you look at the spreads of Italian treasuries over German treasuries, it's calmed down a lot.
Doug, you buy it though, the calm that we're kind of seeing in Europe, at least for the moment. I mean, the S&P came out and said we could see Greece default again. I mean, it doesn't seem like it's quite over. Or do you really think we can put this to rest for some time?
I think normally when the S&P comes out, it's at the end of the cycle as opposed to at the start of the cycle. So I think that's probably good news that they're saying that.
Yeah.
I think that Greece certainly has been put to bed. I think people are talking now about what's going to happen in Spain, what's going to happen in Portugal. They're really talking about it this week, mostly because Spain has a large vote this weekend. And so you need to put the pressure on the policymakers in Spain so they have an excuse for why they're voting for an austerity bill this weekend.
When you look at the currency market, when you make trades at this point, when you give advice in terms of what to do in the currency markets, have you kind of put it to rest when it comes to Europe for the moment?
Well, for the moment, yes. I mean, my focus right now is more in the U.S. and what's happening, or as Bernanke calls it, the fiscal cliff towards the end of the year in the United States. So, I think that Europe's bought themselves 3 years with the LTRO. They're certainly going to buy some more time this weekend as the finance ministers meet.
Now it's our deadline.
Yeah, our deadline. And our deadline is coming up against the election. And so it's very hard to make decisions ahead of elections.
We're actually going to talk about that a little bit more with Bloomberg Business Week's Peter Coy's got something in the recent edition about kind of the fiscal deadlines that we're once again coming upon. So then what do you think of the U.S. dollar and the outlook for the U.S. currency?
I'm not excited about the U.S. dollar in any way. I don't see the U.S. raising rates anytime soon. Certainly 2014, 2015, we're still looking at zero interest rates. Whereas Europe, it seems to me, in my opinion, is fixing their problems over the next 3 years. I mean, they're actually going in there and cutting out the too much spending. The U.S. still hasn't done that, so I don't like the U.S. dollar going forward.
You like the euro a lot.
Yeah.
133, I think, is around the trade today. Where do you see it going in, I don't know, the next 6 months or so?
Fair value based on our analysis, which is looking at the interest rate differentials, swaps, is around 136, 137. I think if you throw in gold and you see a rally in gold, I think we maybe see 140, but certainly right now it should be at this 136, 137 level, and we're still sitting around this 133 level.
Is the next thing you're kind of watching is, certainly when it comes to the U.S., the elections and how that plays out, and then what happens a little bit kind of in the coming months right after that?
Well, I think the elections are very, very important. I think whoever comes in really has the same problems, and it's really how Congress fixes it. And right now it looks like Congress is going to have a hard time in fixing these things.
Yeah, it's not an easy solution, is it?
No,
as we've seen, it's played out in Europe, and it's going to be pretty tough over here. Doug, thank you so much.
Thank you very much.
Douglas Borthwick, he's managing director and head of foreign exchange trading at Faros Trading.